Hello traders and welcome to another video review. Today is Thursday, May 2nd, 2024. Let's find out what's going on the Forex calendar today. So overnight data were pretty non-invasive for the market behavior. We got data from the New Zealand building consensus. We got the data from the Japan in form of the monetary policy meeting minutes. We got the building approvals, trade balance from the Australia. As you can see, building approvals go down worse than expected. 3.5% was the expected number. The approvals already was 1.9%. Retail sales from Switzerland and CPI data were a little bit better than expected, especially CPI 0.3%, retail sales minus 0.1%. We are still waiting for the PMI from the Switzerland as well, scheduled for release at 9:30. Then we have the Germany manufacturing PMI data scheduled for release at 5 to 10, and then we got the Eurozone manufacturing PMI scheduled for release at 10 o'clock. That's it for the London session. During the New York session, we got non-farm productivity and trade balance and unit labor cost and initial jobless claims scheduled for release at 2:30. The initial jobless claims are expected to increase from 207,000 to 212,000. Export and imports are scheduled for this as well at 2:30. Then we have Bank of Canada Senior Deputy Governor Rogers that will give a speech. This data are from the Canada. And at the end of the day, we got factory orders at 4 o'clock, and then German Bua Balz will give a speech at 5 o'clock. And at the end of the day, we got the ECB Lane to give a speech 10:15, and then Fed balance sheet will be released at 10:30. So this is it. This is it for the economic calendar. Let's find out what the majors are doing. As you can see, euro dollar is still locked inside of this consolidation here between very important levels. One from the support. Let me just zoom in. The one from the for the support is located roughly around the level of 1.0650, 1.0657. We got the bullish engulfing pattern from this level, and now the market is approaching higher levels, like for example we got this 1.0736, the technical resistance. We might change our levels here and move it a little bit higher, like here 1.0753, and then we can even move it a little bit here, like 1.0742. So this is our new supply zone, and we will move it like this. So there you go. So everyone to see, this is the new supply zone, and as you can see, only a breakout above this zone will open the round towards the higher levels, and for example the trend line, which is only a piece of the trend line is being visible here. Now the supports, as you can see, we might change the levels here, 1.0649, and this is the support, so we will change it to the green. This one is valid as well. This one is 1.0658, and that one, as you can see, works pretty well. So we will leave it here, 1.0668. So that now the momentum is positive. The market is trying to resume. The uptrend is trading above the 50 and 100 periods moving average. So we might see very soon a test of the new supply zone. So please keep an eye on the euro dollar. We need a breakout either to the upside or to the downside to complete this situation here, and then we have the directional move. Okay, so we got some data from the US, so let's find out what the US dollar to Japanese yen is doing. As you can see, we got another break to the downside. Another break to the downside is located here with the lows. Let me just move my screen. There you go. So we got the A, B, and C for now as a kind of a big correction. The low was made overnight at the level of 153.05. Then we got the immediate bounce from this well, the technical support levels, as you can see. So right now what the market has done is the classical ABC correction. Let me just label it for you guys. There you go. ABC correction. We need a Elliott wave. So there you go. From the top is located at 160.20. There you go. So this is how it looks like. ABC correction looks like completed because this reaction to the upside is quite significant. We just had the a rally towards the level of 156.29. We are still trading below the 50 periods moving average, but as you can see, there is some sort of the change in the technical levels. So let me just apply it here. This is the there you go. This is the all-time high and the swing high and the technical resistance. Okay, so that should be, of course, red. And this level here, the top of the wave B, will be significant in our analysis as well. We might see some sort of the action towards this wave B high soon enough. So for now, ABC correction is done. We might see some bullish price action as long as this low of the recent movement towards 153.05 is not violated. So that's the use of the Japanese yen. Let's just take a look at the gold market. This is the 4-hour chart of the gold market. The gold keeps going down. The gold keeps going lower, keeps going below the moving averages. Recently we've made a low at the level of 2,281. This low was made during the extremely oversold market conditions. So we got the automatic reaction, we got the bounce towards the level of 50 on the RSI, of course, and now when we hit the 50 and 100 periods moving average, the market is trying to reverse again. So we're still below the trend line, the main trend line. We are still trading higher. We are still trading higher towards the level of 2,200, and this is 67. So that's the major technical support. This one has been violated, 2,290. Nevertheless, we can still place it on our chart, and then we got this level here, the lows, the recent low 2,282. From the upside, we can notice the 2,352 technical resistance. We can notice the this level here, 2,346. So we got already, as you can see, some sort of the test that have been done for the loss of 17 April, and we got now supply zone located between those two levels, and apparently those two levels looks pretty solid. So if we want to resume the uptrend, with the bulls needs to break above this level. Without any solid breakout above this level, 2,352, there is no movement to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.